This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments. You have the Trade Spotlight Futures, Trade Spotlight Commodity Options, Trade Spotlight Futures Spreads. This is Beyond the Spotlight, a video that will spotlight 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, May 11th, 2020. Before we review the 3 charts, please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Quick snapshot of what the advisory service looks like. It's sent directly into your inbox. You'll have the timestamp so you know when the trade recommendation was sent out. A write-up of the trade, precise entry and exit orders, and the risk-reward parameters, whether it's a futures contract, commodity option, future spread, any pertinent information like margin requirements, and a chart that you can enlarge to take a look at the recommendation. Okay, let's go to our first chart for today. This is the October 2020 sugar contract, and we have the beginnings of a 1-2-3 bottom formation. A 1-2-3 bottom formation is a trend reversal formation, so we're looking to trade against the trend to the upside in anticipation the trend is going to flip on the breakout. Now, there's only 4 days in between the number 1 point and this number 2 pivot point, so that's really not enough data for a strong 1-2-3 formation. You'd like to see weeks or even months for that formation to set up. But in these times, with the volatile markets we have, I'm looking at a shorter time frame in between these points for good setup opportunities. So the number 1 point is the 12-month contract low. That was put in on April 28th at 9:52. Then we had that rally where the market traded up to 11.24 on May 1st. So potentially could have caught this rise up, but typically with this formation is you get that pullback to about 50% of this rally. You can see I have a horizontal line drawn off here. That looks to be a potential support level. And the market on Friday traded down to that level, but closed above this 20-day moving average. That 20-day moving average is at 10.45. So if we stay above this support level and stay above this 20-day moving average, if we have a higher low, that sets up the number 3 point, and then we could potentially get long. Now you can see the momentum is still down. The trend is flat right now. Again, it's a trend reversal formation, so we would be getting in a little quicker than the trend is going to flip. So this is more of an aggressive trade, but we've looked for a break above this pivot point high, which again was 11.24 from May 1st. I did a 50% Fibonacci retracement of this big sell-off, and that puts it at 12.27. That can be an initial upside target, or the 200-day moving average at 12.91. But there's a lot of room for the sugar market to rally. So I will base my reward on the potential risk. So we have at least a 2-to-1 risk-reward ratio on this trade. Moving over to the next chart, this is the December 2020 lean hogs contract. And again, I'm showing you a 1-2-3 bottom formation. This one, however, has a little more time in between the number 1 point and the number 2 point, and potentially the number 3 point. So looking for the market to trade down to bounce off this lower trend line that I've drawn off using some of these recent session lows, and then trade above this 20-day moving average and close above that 20-day moving average. That would give the formation a little bit more strength. So we can purchase the contract on a break of this number 2 point. That comes in at 60.82.5 from April 28th. But ideally, we can find a better entry down in this level between the 55-56 price level where there's a 50-day moving average. A crossover of the 20-day moving average and 50-day moving average is a bullish signal. So that would, again, add some strength to this formation. Right now, the momentum is down and the trend is down. This is the MACD and stochastic indicators. So there is the potential for the market to trade down a little bit lower to 51.50 price level. But ideally, this trend line holds because, again, that gives us a support level. That gives us a potential stop placement on a futures contract. It can go right below this trend line. Some upside targets would be in this range here between 63 and 67, where we have some potential support or resistance. And the final chart today is the July 2020 crude oil contract. Again, showing you a potential 1-2-3 bottom formation. Although on this chart, we also have a potential inverted head and shoulders. This would be the left shoulder. That low comes in at 22.97 from March 18th. Then you have the rise and the sell-off past the shoulder to form the head, or the 12-month contract low, which comes in at 17.27 from April 28th. And now the market price is back on the rise, trading back into this range here around the 29.30 price level. So looking for another pullback in this market, ideally down to about this previous contract low, about the 22 price level. You can see the momentum is up in this market, so I'd like to see the stochastic indicator pull back and then get ready to turn over with upside momentum. There's a 20-day moving average here that the market's trading along that could act as a support level. But again, would ideally like to see the market pull back into this area first and then look to go long. There is a gap on this chart that could potentially be a target level. It's near the 50% Fibonacci retracement of this big sell-off, which is at 39.88. So potentially the 40 price level is a target. Crude oil is extremely volatile. So perhaps we look to options for this trade opportunity or a future spread. But once it sets up, I'll send out that recommendation with the best vehicle to maintain a good risk-reward parameter. If you have any questions on any of the markets I went over today, or just trading in general, you can reach me at the local international number, cell phone number, or toll-free number, or feel free to email me at tradespotlight@danielstrading.com. If you're not a subscriber to the Trade Spotlight, I encourage you to do so by going to the Daniels Trading webpage. Click on the Advisories tab, and under Technical Analysis, you'll find the Trade Spotlight. You can read more, review recent posts, and subscribe. It's free to clients of mine. Otherwise, I offer a free 90-day trial so you can follow along with my trades. Thank you for taking the time to listen to this video. I hope you, your family, friends are all well, and happy trading.